Hey, this is Matt from InvestiQuant. Today is Wednesday, March 24, 2021. And before we get started here, I wanted to invite you all to come join us tomorrow after the close, which is Thursday at 4:30 p.m. We'll be hosting a webinar about auto trading, how we do auto trading. We've got a portfolio that trades the S&P. It's having some stellar results this year. It's something that you can trade along with us here at InvestiQuant. And if that's something you would like to learn about, if you'd like to see the results of our auto trading strategies, how they've performed, we're going to go over all kinds of stuff like that tomorrow after the close at this webinar. There is a link underneath the video, which is just investiquant.com/webinar. That'll take you to this page. If you fill out your name and email, you will be able to join us and learn all about that. So if you're at all interested in statistical edges, trading them, and the results that go along with those, this is probably something that you would enjoy joining us for. So that'll be tomorrow after the close at 4:30 p.m. Eastern Time. All right, let's hop into today's daily IQ study. Today we're going to be looking at a pattern based upon pivot points. And the pattern that we'll be looking at is based upon closing between the S1 and S2 pivot point, followed by opening up the next day between the pivot point and R1. So let me set this up in Discover. I've got all four instruments selected here. The trade type is based upon entering the market long at the open of regular trading hours and exiting at the close of regular trading hours, which is 4:15 p.m. Eastern Time. All right, so to set up this study, we're going to be looking at gapping up between the pivot point and the resistance 1 pivot point. So I've got that selected here in our open versus pivot zone. The pivot zones allow you to select an opening location between the different pivot points that are available on a daily basis. So I've got that selected. Next, I'm going to go into the price patterns, and I'm going to say that yesterday closed between the S1 and S2 pivot. So to add that, it's actually in this location of last open and close, but I'm going to grab it from the active today because that's the quickest way to do it. So I'm going to go to that same section and then go to close between S1 and S2. That adds it to the test. You can see this highlighted blue telling you it came from that category. If I scroll down through our long list of options here, you'll be able to see it here, close between S1 and S2. So that has been added. Now I'm going to put it in a similar market environment. Yesterday we closed below a 10-day simple moving average, but above the 200-day simple moving average. So let me add that, and now I can hit view results. And here we go. These are the results based upon going long at the open of regular trading hours, which is 9:30 a.m. Eastern Time, and exiting at the close of regular trading hours, which is 4:15 p.m. Eastern Time, when you gap up within the pivot zone, which is the pivot point to R1, so a little bit higher opening here, when the following day closed between the S1 and S2 pivot point. This has taken place in a weaker bull market, which I've described as below a 10 but above a 200-day simple moving average. Historically, the S&P has 70 samples of this pattern, the NASDAQ 57, the Dow 63, and the Russell 75. If we look at the win rates on them, you'll see the S&P coming in at 59%, the NASDAQ very similar, 61%, the Dow very similar, 59%, and the Russell doing its own thing over there at 48%. So three of the four are very similar in win rates, right around 60%. The Russell more neutral on that instrument. If we look at the average win and average loss, the average loss a little bit larger than the average win in the S&P. For the NASDAQ, the average win is larger. For the Dow, they are very similar in size. And for the Russell, the average win is larger. So three of the four instruments have favored a green candlestick with that pattern, so closing above the open. And two of the four instruments have had larger average wins than average losses, but that is not the case for the S&P, and the Dow is pretty similar in size. So hopefully you found that helpful. Good luck today, and we will see you next time.